Elon Musk just said that the recession is already here. He replied to this tweet, "If a Federal Reserve does what's necessary to contain inflation, I think a slowdown is likely to come. The odds on that happening sometime in the next 12 months, I think, are pretty good, perhaps 70%. And Elon says this: "The Fed data has too much latency. A mild recession is already here." It's not like just the canary in the coal mine died, which would be the Silicon Valley Bank in this case. One of the staunchest miners, Credit Suisse, died too. And the cemetery is filling up fast. Further rate hikes will trigger a severe recession. Mark my words, says Elon. He continues, "Between Tesla, Starlink, and Twitter, I may have more real-time global economic data in one head than anyone ever." And indeed, the cemetery is filling up. First Republic Bank also went under. It had $200 billion in assets, which makes it the 22nd biggest bank in the USA. And there's an 84% chance that the interest rates will be increased again in the US. Elon also replied to this tweet, which said, "For Toyota Corolla, it was the worst March ever." And for Toyota, it was the worst Q1 overall in 12 years. And Elon says that it is becoming harder for people to get car loans in the US, even when their credit is good. Understandable that banks are slow to extend credit when they are trying to avoid bankruptcy themselves. And Chicken Genius went from saying to buy now to sell.
Risk to reward, downside risk is higher than the upside risk. Risk management, that's all. Liquidity is down, and there are many ways to track liquidity, so I take an aggregate. Money supply is also down. You see, this pump over here, it's gone. We enjoyed the ride up, and it's coming back down. In the world of finance, there's monetary lag. So for example, when the Fed first started raising rates, the stock market continued up for months. Lag. So if liquidity is removed, it doesn't mean assets will react straight away. Give it time. So in my last video, a month ago, I talked about the US dollar coming down. The US dollar looks like it's forming a durable bottom too, and it's going to spike back up. The US dollar going up is really bad for risk assets like stocks. So taking many factors into consideration, the overall direction of the market is down.
If Tesla stock does drop quite a bit lower, and if it does drop even below where it was on December 27th, which was pretty much the bottom for Tesla stock, I will be buying more just like I did in December. I'm still accumulating quite a bit, so big drops actually make me excited because, I understand in the short term why people are going to be upset if it does happen, but in the long term, how does that affect the Cybertruck, the next generation vehicle? I don't see structural and fundamental massive changes in the long-term Tesla stock bull thesis. In the short term, though, it could get really bumpy, just like it basically always has been for Tesla stock for the most part. If you invest into Tesla stock, you better understand the history of Tesla and Tesla stock. When Tesla went public, it was volatile, and then it, bam, shot up, and then it fell, only to rise and fall, and then rise, and then fall, and then rise, fall a little bit, fall more, then rise, and whoa, that was quite a rise to the moon. Now I got a question. If you trade Tesla stock, you will be right many times then the stock falls. But will you be right before it skyrockets, just like how you just saw it skyrocket right here on this chart? That is a big question. And if you are a trader, sure, you can benefit from another fall right here. Each one of these falls often are big falls. This is another consolidation period where the stock basically does nothing for many years. Keep in mind, we are now entering 2017 and the stock has done basically nothing from 2014, but it breaks through and No. Again, it fell. That's Tesla stock for you, and then it shoots up again. Now, would you want to miss this up? See how it just keeps climbing the chart? You can't even see the history of Tesla stock now because it went up so much, so quickly, and it just keeps going up. So, looking at this present moment, with Tesla stock supposedly down a lot, is this anything different from what happened before? Not really. If you are a new investor and you haven't studied the history of Tesla stock, maybe it comes as a big surprise to you. How come Elon Musk seems so unfazed by huge stock movements? Well, this is nothing new.
I prefer my portfolio to move up with reduced volatility on the downside. While I may miss trades, there's always better opportunities. It's better than a 50% drop in your portfolio. So with the SP 500 looking like it's making a top, same for the NASDAQ, a topping out, it is not the time to take on risk. Again, market conditions change in an instant. That's why I post my latest thoughts on Twitter.
If you feel like you are in the top 1% of all of the traders, certainly you should go ahead and try to trade because you will probably make a lot more money. In the meantime, I will keep buying Tesla stock based on how well Tesla, the business, is going to be doing 10 years from now. Not based on how the economy is doing and what I think the economy is going to do. I don't want to sell just because the stock drops a lot, about 50% or more, and then risk missing out on a huge run-up. Is this time going to be that time? Maybe? No, not this time. It's a drop. It's a big drop. And then, bam, it skyrockets. We may go up and down like that multiple times though, before the next big breakout phase. Gary Black thinks that a recession is likely, but that it is going to be a shallow recession.
So I'm more of the camp that we're not going to have a deep recession. I think it's going to be, 6 months and it'll be over. I think the Fed is smart enough to know that they already broke something. You've seen a couple banks already go under. You might see First Republic go under, which wouldn't surprise me. And at this point, I think they're going to do one and done. They'll probably raise rates in May by 25. That's next week. And then I think they're just going to sit here for a while and see what the impact is. And as you've seen with the economy today, GDP was up 1.1, not a big number. Fourth quarter was revised down to 2.6. You still see claims coming down, so there's still strength. And inflation has really retreated. If you don't look at a year rolling numbers, but look at say 6-month numbers, you're down to about 3% annualized inflation.
Wow.
And so I don't think that the Fed really needs to keep pushing rates up. So my bet is we're going to get to next week, they'll do 25, they'll probably signal that they're going to want to pause, and I don't know how explicit they'll be.
Yeah.
And then I think that'll be enough that the economy can kind of, and I don't want to be Goldilocks about it or Pollyannish about it, but I think we can float down to about a 0, maybe a -1 for the second half. And then it'll be over because at some point the Fed's going to start cutting rates if we're in a recession.
The consumer price index has been falling by quite a bit, which is good. I don't like inflation. I don't want anyone to suffer from high inflation. But at 5%, it is still too high for the Fed. This is going to be a little bit hilarious, but also very important to watch. Pranksters posing as Ukraine's president tricked the Fed chair into a phone call. We have a recording of that, and this is not a joke. This actually happened, and we had a rare opportunity to hear what Jerome actually thinks. He was very straightforward on that call. Take a listen.
But what we're going to find is that growth in 2022 was positive but modest. It was subdued. So, 1% around that level. In terms of this year, most forecasts call for the U.S. economy to continue to grow, but at a pretty subdued level. So growth of less than 1%, let's say. But we would tell you that a recession is almost as likely as very slow growth. So that's a fact, and I think that is partly because of us having raised rates quite a bit. But this is what it takes to get inflation down. To get inflation off of the high, we've had inflation at its highest level in 40 years. To get inflation to come down, what we need is a period of slower growth so that the economy can cool off, so the labor market can cool off, so that wages can cool off. And so that's how inflation comes down. That's the only way we know to bring inflation down. And it can be painful, but we don't know of any painless way for inflation to come down.
Keep in mind that recording was from January. We had multiple banks collapse since then. If back then Jerome thought that growth is just as likely as a recession, now I would think he would say that recession is more likely than growth. That is, if he was speaking very honestly. In the end, while a recession would hurt Tesla, I think it would hurt other competitors a whole lot more. So while in the short term, it may be a very terrible thing for Tesla and Tesla stock probably almost certainly, in the long term, this may actually be good for Tesla because it would be able to pull ahead even further ahead of all of the competitors. And despite me thinking that Tesla stock most likely actually it will drop further, which is what I said back in August, I made a decision to stick with it for the long term. Because I don't think anyone knows exactly when is Tesla stock going to break out. Is it going to go lower? Maybe. Or is it going to break out this time? Maybe. Maybe not. Maybe. Maybe not. Maybe this time? Well, I believe it is going to happen again. I am also posting videos exclusively on Patreon. This one is about a regulatory body that is not being fair to Tesla. The sign-up link to become a Patreon supporter is down below in the description. And this is a video that explains why Tesla board members are now buying more Tesla stock. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.